Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, first things first. Shutdown averted. Even Elon Musk on board as GOP interim spending bill passed with bipartisan support to keep the government open. So the federal government did not shut down at midnight in a quickly cobbled together package with no mention of Donald Trump's pet project of raising the debt ceiling. The House of Representatives just passed a funding bill that will keep the government running until March of 2025, so we don't have to worry about this again until then. Making it over the two-thirds requirement with bipartisan support, even with dozens of Republicans voting against Speaker Mike Johnson's last-ditch efforts, the revised continuing resolution now moves to the Senate. The upper chamber is expected to move pretty fast to seal the deal and then get it to still sitting President Joe Biden's desk to sign, so that came and went. Wow, it's been an amazing year, an amazing month, and that was an eventful week. So now we look to the final days of December and into the new month and year. First, you may know today, Saturday, December 21st, is the 2024 winter solstice, the shortest day of the year. This celestial event signifies the first day of winter astronomically, and for me, it marks the first day of Swan Watch from now until the Trump inauguration day on January 20th, exactly 30 days from today. For those that follow this channel, you know I was long volatility before last week, and that paid off. I bought the $14 calls expiring December 24th on December 3rd at about $1.40 and sold them for $2.45 on the 18th. My partner on the trade did even better. I put my option expiration dates on my calendar, but when it comes to VIX options, be careful to remember the day before is considered the last trading day before it settles to cash on its expiration. So for Monday, December 23rd, 10 a.m., consumer confidence. Tuesday, December 24th, is Christmas Eve, obviously. 8:30 a.m. we'll get durable goods orders and durable goods minus transportation. At 10 a.m., new home sales. Then the markets will close early at 1 p.m. Eastern Time. The overnight trading session, which typically opens at 8 p.m. Eastern Time, will remain closed. Check with your broker on that. Wednesday, December 25th, is the Christmas holiday. The markets will be closed, but the overnight trading session will reopen at 8 p.m. Eastern Time for me. Thursday, December 26th, 8:30 a.m., initial jobless claims. Do you guys know about the significance of equinoxes and solstices in the stock market? Equinoxes and solstices are astronomical events that mark significant points in the Earth's orbit around the sun. An equinox occurs at the start of the spring and fall. It occurs on March 21st and on September 23rd. On these dates, day and night are of equal length. The solstice occurs during the summer and the winter. It occurs on June 21st, the summer solstice, which is the longest day of the year, and on December 22nd, the winter solstice, which is the shortest day of the year. Because equinox and solstices are important events in our solar system, it may have an impact on the stock market as well. We've seen major trend reversals in the past around these dates. Decisions cannot be taken based on these dates alone. We need to consider other factors and technical parameters to decide the expected market trend. Now, this post was from 2023, but before you laugh this off, I would ask you to consider the chart on your screen. Turns out there's been significant trend reversals on these dates, which means we should be cautious. Okay, January is already shaping up to be an exciting month. We have all the regular shit on here, but this is also the month of Trump. So I'm on Swan Watch until he moves into the White House and Gary Gensler moves out of the SEC. The markets will be closed on Wednesday, the 1st for New Year's. But did you know the markets will be closed on Inauguration Day too, because it's also MLK Day? Did you know that the World Economic Forum's annual meeting begins on our Inauguration Day and ends that Friday? And you wonder why Uncle Frank is on Swan Alert? In January, we get employment data on the 10th, PPI on the 14th, CPI on the 15th, and a rate decision from the Fed on the 29th. Let me end the suspense right here. We ain't getting another rate cut on that day. Initial jobless claims comes out every Thursday morning, and you need to watch it to see if it comes in too hot or cold. I added 3 VIX options expiration days to the calendar. Not investment advice or advisor, but January 22nd is jumping off the page for me personally. Now, guys, we could all agree artificial intelligence, or AI, was the big buzzword in the market this year. I could even argue it saved the market from a serious correction in 2024. Then attention began to rotate into quantum computing. Those stocks all took off. I made good trades on RGTI, and my friends jumped on QUBT. Those are up 780 and 1800% for the year, respectively. Then on the 19th, an article came out in the Wall Street Journal pointing out the obvious. The age of quantum software has already started. Companies are building quantum algorithms and running them over simulators and early-stage machines. That's where I learned about IONQ. I bought that one at $36.60 and sold it the same day for $46. Receipts to your right. These rotations are happening very quickly. But it's clear you can't have the best AI without quantum computing, and those can't run without quantum software. So now I'm wondering, did the market miss any opportunities because the story is developing so rapidly? So on Friday night, I came across this article titled 2 Underrated Quantum Computing Companies Starting to Rally. First, he mentions Rigetti, a stock I love and already traded in and out of. I added it to my crash watch list as one of the names I may pick up on sale if there's a correction. Rigetti, cash runway toward profitability, but risky. I know some of you insist on seeing receipts, so to your right are my confirms. I bought the stock on the 10th at $4.49 and exited the position on the 17th at $10.90. Anyway, he mentions another firm I hadn't heard of, and that's Arqit, ARQIT. So remember, I'm looking for quantum-related opportunities that haven't gone parabolic already, so I started to dig deeper on this company. Arqit's participation in the quantum space is unique. The firm provides a cloud-based quantum encryption subscription service to protect high-security data transmission. Shares are up more than 124% in the year, leading to December 19th. Arqit's year was incredibly busy. The firm reported modest revenue of under $300,000 for the 2024 fiscal year, which ended September 30th. However, it appears poised to grow revenue significantly, given that the company recently finalized a multi-year contract with an unnamed government in the EMEA region. It is expected to generate annual recurring revenue in the 7-figure range. The company has introduced cost-cutting measures to help it reduce the impact on its modest cash position of under $19 million as of the fourth quarter earnings report. On top of that, the company completed a 25-for-1 reverse share split in September, the same month in which it appointed a new CEO. With all of this upheaval at the company, investors will likely watch for signs of stability going into the new year. Arqit's technology appears to be taking off, and interest in contracts is growing. However, the firm still spends cash at a fast rate and has so far failed to establish recurring top and bottom line performance sufficient to sustain operations at this pace for the long haul. Investors with a long horizon and a high tolerance for speculative investments, however, may be rewarded for an early interest in this quantum cloud computing company. So it sounds like all the bad shit we've experienced has already happened. I went to the company's website to learn a little more. Arkit's VPN encryption solution. Our integrated automated solution provides on-demand quantum-safe encryption for enhanced protection of VPN data communications. Number one, quantum safe. Creates quantum secure data links and supports a quantum secure deployment. 2. Advanced defense. Protect complex estates from growing threats to certification and spoofing. 3. Compliant. Meets the demands of U.S. National Security Memorandum 10 and NSA CSFC Symmetric Key Management Requirements Annex 2.1. Standards-based, usable with existing and proven data encryption standards such as AES 256, and low-effort integration. Implement immediately with no fuss through OEM network integrations. So now let's take a look at the daily chart. And as I suspected, the company stock was quiet until this recent quantum wave kicked in. Then the stock advanced from a low of 372 and sprinted up to 42.90 on the 18th. Had a big red candle on the 19th like everybody else, and then Friday finished at 30.50, up 3.57 or 13.26%. Now when I zoom into the hourly chart, things become more interesting. Now I want to see if the stock can hold 28.60, 28.65. If it can, it may be heading higher. If it can't, it may drop to the next support level. I put a white horizontal line in at around 28.60. Barchart.com is saying its first support level is at 25.30. So now I have a range to watch if the stock is heading down when the market reopens. Now, ARQQ doesn't trade 24 hours at this broker, so if I want to stick a toe in the water, I'll have to wait until early Sunday morning's pre-market session at 3 a.m. Central. I'll also be watching Bloomberg to see how the futures around the world are doing and to discover if anything crazy is going on geopolitically speaking. Now, at the close of November, short interest on ARQQ was only 6.4%. But what's helpful to know is I can see when they began shorting the stock. That white arrow shows October 15th, and it's been up sharply from there. This chart depicts short position change and gives you context on the short sellers' activity moving into last month. Now I can say that their interest in shorting the stock has increased recently. By the close of November last year, they were short 97,300 shares, or 1.56%. By the close of this November, they were short 415,000 shares, or 6.4%. That's 4 times as much. It would appear the cost to borrow fee took off in late November. At the time of this recording, I see only 3,000 shares available, but at a rate of 146.12. And what about fails to deliver, Uncle Frank? Has there been any recent activity in FTDs? Well, take a look at that. Apparently back in June there was. You guys know all about this crap now, don't you? Listen, this is a very high-risk play. This is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. But the real reason I'm looking into this one is because AI and quantum computing is going to become very dangerous in the very near future. This company is in the business of keeping systems at this level safe, and I think that will benefit this company greatly down the road. Bad actors simply cannot have access to these huge, powerful AI quantum systems. This company keeps that sort of thing from happening. The question is, can they survive long enough to take advantage of this new trend? As you know, crypto took a beating too this past week, and if you want to know what I was doing, just take a close look at your screen. I stayed exclusively in the ISO area. I was actively buying XRP, HBAR, and XLM in that order. At the time of this recording, XDC seems to be recovering the best of the group that includes XRP, XLM, Algorand, IOTA, Quant, and HBAR. I want you to know that XRP remains my main focus for crypto in 2025. I wouldn't mind having a separate portfolio of just these names and still may develop that. My friend Barry believes this group of cryptos would make an amazing ETF, and that's the best idea I've heard in a long time. So why am I so bullish on Ripple and XRP? Well, I have a hell of a lot of things to look forward to. The launch of Ripple's stablecoin was successful, and I believe will quickly become the biggest stablecoin in the world. I believe there will be a much more favorable regulatory environment for crypto after Trump takes office and Gensler is gone. I believe this could lead to the final resolution of the SEC's case against Ripple XRP. After that, I believe at least 4 XRP ETFs are coming online, 5 if you include Grayscale's trust conversion into an ETF. Furthermore, I don't care what BlackRock may say publicly, there's no way you're keeping them out of the XRP ETF business. Just my opinion. I believe XRP and XLM are top contenders to be used in Elon Musk's payment system for Twitter. I believe XRP will gain mass adoption from banks and money transmitters all over the world in the very near future. I believe RippleNet and XRP will rise as Swift's most formidable competitor and may gain significant market share of Swift's $5 trillion per day business. And with Gensler gone, I believe that puts the Ripple IPO back on the table and can only help the coins created by that company, XRP and XLM. Breaking from the Cryptopolitan today, XRP whale activity during market correction pushes the coin 13% up, $4 market price in sight. XRP has experienced a significant downturn in recent days, shedding over 17% of its value since Tuesday. Despite this sharp decline, key on-chain data from Santiment highlights that whales are capitalizing on the dip. According to Santiment data, large holders have accumulated an additional 110 million XRP in the last day, signaling strong confidence in the asset's potential. I say XRP hits a new all-time high in the first quarter of 2025. Not investment advice or advisor. How do you like this one, guys? Ripple just dropped $5 million in XRP to President Donald Trump's inauguration fund. The Trump-Vance inaugural committee reportedly confirmed it, and it's the largest crypto contribution they got. The fund, which has already hit over $200 million, will fuel a 3-day bash celebrating Trump's win and VP-elect J.D. Vance. Coinbase and Kraken each pledged $1 million, while MoonPay chipped in too, though they haven't shared how much. And now let's take a look at our girl, ACHR. There's the hourly chart, and she came through it all like a trooper since that low on your screen of 723. Steady rally to a high of 1058 and weathered the storm to finish the week at 949, up $1.07 on Friday, or 12.71%. After hours, she added another 21 cents or 2.21% because she just can't help herself. Now here's my favorite article from George Budwell at The Motley Fool from Saturday morning. Here's my only major concern with Archer Aviation. The urban air mobility revolution is approaching faster than many realize. I agree. eVTOL aircraft, essentially next-generation helicopters, powered by batteries instead of jet fuel, represent a transformative leap in urban transportation. J.P. Morgan analysts estimate this emerging market could reach $1 trillion by 2040 as electric aircraft transform transportation between and within cities. While many startups are pursuing this opportunity, One company has rapidly distinguished itself through exceptional execution and strategic partnerships. With strong order flow, key industrial partnerships, and a clear path to production, Archer Aviation warrants serious attention from growth investors. Yet beneath this promising exterior lies a potential risk that could significantly impact long-term shareholders. Here's why I'm both excited and concerned about Archer's trajectory. Under the heading Breaking Ground in Georgia, I'm particularly impressed by Archer's new 400,000 square foot manufacturing facility in Covington, Georgia. This milestone represents a crucial step in the company's journey from concept to commercialization. Initial production is scheduled for early 2025, with plans to reach 2 aircraft per month by the end of the year. The facility's ultimate target of 650 aircraft annually by 2030 demonstrates what I consider a well-balanced approach to scaling production. The manufacturing ramp-up strategy shows both ambition and pragmatism, key traits I look for in early-stage aerospace companies. Under the heading Validation through Partnerships, what catches my attention next is Archer's recent exclusive agreement with Anduril Industries to develop military aircraft. This partnership becomes even more intriguing when considering Anduril's recent moves in artificial intelligence and autonomous systems. Speaking to this point, the defense technology company just announced a strategic partnership with OpenAI to advance autonomous defense capabilities, particularly in counter-drone applications. I see powerful synergies between Archer's eVTOL expertise and Anduril's Lattice software program, which enables a single operator to control multiple autonomous systems across different domains. The development of autonomous or optionally piloted military aircraft could open up entirely new mission capabilities for the Department of Defense. Furthermore, the $430 million capital raise supporting this partnership, which included participation from strategic investors like United Airlines and Wellington Management, reflects the market's recognition of these possibilities. Meanwhile, on the commercial front, a joint venture with Japan Airlines and Sumitomo Corporation could generate up to $500 million in aircraft orders. These partnerships have helped push Archer's indicative order book beyond $6 billion, validating both its technology and business model. George, don't forget Future Flight Global and the United States Air Force. Under defense sector potential, I'm intrigued by the market's seeming underappreciation of Archer's defense opportunities. Major defense contractors like Lockheed Martin, General Dynamics, and Northrop Grumman have historically outperformed the S&P 500 by substantial margins over extended periods. This outperformance stems from lucrative multi-year government contracts and consistently strong bipartisan support for defense spending. With a market cap of just $3.6 billion at recent prices, Archer's current valuation appears to largely ignore its defense potential through the newly minted Anduril partnership. I completely agree. Developing specialized hybrid eVTOL aircraft for military applications could open up decades of steady, high-margin revenue streams. Many successful defense contractors began as small, specialized tech companies before growing into industry giants. I believe Archer's early moves into this sector could prove similarly transformative for the company and its shareholders, but only if it remains independent long enough to capitalize on this opportunity. Under the heading Disciplined Financial Management, I'm particularly impressed with Archer's financial discipline for a pre-revenue company. With over $500 million in cash and a stable quarterly spending, The company's balance sheet screens as exceptionally strong. Moreover, Archer's 12.4% share count increase over the prior 3 years stands well below its peers' 21% average dilution rate. This conservative approach to capital management suggests to me that Archer's leadership team deeply values shareholder interests. That's a key trait I look for when investing in cutting-edge growth companies. Under the heading, A Partnership's Hidden Risk, here's where my concerns begin to surface. Global auto giant Stellantis, formed by the 2021 merger of Fiat Chrysler and PSA Group, owns a whopping 20.2% stake in Archer. While the automaker's manufacturing expertise and financial support are crucial to Archer's development, I believe this substantial position could foreshadow a full acquisition attempt. Stellantis brings invaluable automotive mass production knowledge to the table and has committed significant resources to Archer's success. However, the automaker is facing its own challenges. The recent unexpected departure of CEO Carlos Tavares and the company's declining European market share have created uncertainty around its strategic direction. This turbulence at Archer's largest shareholder and key manufacturing partner adds another layer of complexity for investors to consider. To sum up, I worry that Stellantis, seeking to transform its business amid industry-wide electrification challenges, might view acquiring Archer as a strategic necessity, even at a significant premium. Such a scenario might deny shareholders the full value of Archer's long-term potential across air taxi services, aircraft sales, and defense contracting. And George left out a ton of stuff here. Stellantis has been struggling with more than just a departing CEO. They've had to deal with recalls. They've had to deal with strikes. Buying a company like Archer immediately puts them in business with the United States government, United Airlines, Future Flight Global, the U.S. Air Force, on and on. So this may be the only way to save Stellantis, is to buy Archer. Under the heading, The Interesting Takeaway, in my view, Archer Aviation exemplifies the rare startup that has successfully navigated the challenging path from concept to eminent production. However, the partnership that helped enable this success might ultimately limit shareholders' returns. Investors must weigh the company's tremendous potential against the possibility that Stellantis' significant ownership stake could lead to a premature acquisition, cutting short what could be a much longer and more valuable growth story. After all, Stellantis has a well-established history of acquiring innovative companies with a potential technological moat, and Archer fits that description to a T. Well, for once I agree with the Motley Fool. If I were Stellantis, I would already be putting together my offer for this company. This investment puts the troubled car maker in business with United Airlines, Southwest Air, JAL and Sumitomo, Future Flight Global, the U.S. Air Force, Anduril, and the Department of Defense overnight. It would completely change the narrative on an overall view of the company, from a troubled automaker to manufacturer of the aircraft of the future and eVTOL defense contractor. Not investment advice or advisor, but I believe Stellantis would have to be insane not to buy this company for the indicative order book alone. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.